All right, good morning, good evening, good night. Layer1Live coming at you on a Monday, per usual. Hopefully everyone's having themselves a good day. We got a major announcement to make.
Oh,
If you check the Layer1 Twitter, it might have leaked. I don't know who leaked that stuff, but we've got the leak going. We've got the huge announcement that we'll get to here in a second. A lot of crypto news this week, per usual. I mean, we haven't had a down week for a long time here. We're going to hit Stellar. We're going to hit Ethereum, EOS DeFi, NFTs, some Twitter hacks, some PayPal breaking news. We got a ton of stuff to get to. Dimitri, what's going on, man?
yeah, man, I'm excited. It's interesting to see another great week of news for crypto. Crypto never sleeps. We got action all the time. So get some interesting headlines that we can go through for sure. I'm excited for the announcement. We can get into more detail of that. And yeah, you got the perfect duo today.
Yeah, the perfect duo, the dynamic duo, as they say. Some of you are kind of filling in the chat here. We've got Seth. What's going on, Seth? Seth came in from NFT Live last week, so we've got a bunch of different enthusiasts across the crypto sphere. Kieran's in the chat, of course. We've got Manos in the chat. He missed first, but he got in here. Basically, guys, what we're about to announce here, and I'll pull up my Twitter feed and see if we can't get into it, is that we are partnering with Roll to launch Lads. Now, Lads is not the community, although it is. This Lads is the token. So I'm going to pull up the Lads token Substack blog here, announcing the Lads token. So boom, boom, boom. All right, we got it. So basically, guys, we had Sid on a little while ago. I think like a month ago. He got on the episode talking personal tokens, talking social currencies, how communities are leveraging these personal tokens. They're creating them for kind of their community members to take part, and take part in staking or getting a stake in that network. So if you do go over to our Twitter, you can see this article. You announced your announcement, but I'm announcing your announcement. Yeah, I told the guys it's gonna be a little Justin Sunish, at least to start today. But basically, guys, we have this announcement here, and it's talking about the trip that we've had over the last 9 months, and everything we've done with the community. From that time forward. Obviously, we've interviewed a ton of guests. I think about 56, it says here. We've amassed over 110,000 views. We have Layer1Live now. We have Dimitri's desk. We have NFT Live. All of these things didn't exist, when we first had Layer1 in the beginning. And, the Lads community is something that we've kind of taken or like cherished, over the past 9 months. And we want to kind of reward you guys for that. Now, we're not doing a raise. This isn't like you guys are sending us ETH and we're sending you Lads and the token price goes 100x. But this is going to be used as an incentive and as a reward for participating with Layer1. Well, we're going to launch a couple articles this week talking about why we chose Roll, talking about how we're going to use the token, and those will all be coming this week, and you guys should be getting that info. But what do you think about this news, Dima? What's your initial thoughts on the Lads launch?
Yeah, I'm excited. There's different things that I'm thinking of how I can utilize this token specifically to like Dimitri's desk segments. We can integrate that. If you guys want me to look at specific charts, we can maybe have that token involved, in transacting me to take a look at specific charts or do something tailored to your liking, guys. So a lot of interesting stuff is coming down the pipeline for us with this Lads token. So yeah, man, I'm super excited.
Yeah, we're definitely looking to launch this next Monday. So it's gonna coincide with Bitcoin stakes that we do. The Lads know about this, but it's gonna coincide with Bitcoin stakes. So the winner of next week's Bitcoin stakes will likely get some Lads and be the first member to get it. But certainly we'll be launching again or like publishing that article on Thursday, talking about how we're gonna distribute this initially. Certainly, you guys have put in a lot of work over the past months helping Layer1 grow. So you guys deserve some Lads as we start to distribute that. But anyways, that's the news. I'm getting our kind of episode out here as we talk. I think the published article got picked up by Roll, so they just retweeted us. But I'm gonna post our Layer1Live. So let us know what you guys think about the Lads token, man. We've been kind of talking to the roll team for a little while here, but we just, wanted to get that information to you. Again, Monday's the launch. We got some articles this week. Certainly, we're going to get some of your feedback on how we can use the LADS token as well, and see how we can't go forward with that. It'll be fun. My favorite part's going to be like a leaderboard. We'll see who has the most LADS in the whole community and see how we can use that.
Yeah, watch it get listed like on Uniswap, the next day.
Yeah, someone's going to create that liquidity pool there. I will get to Canva here, or I will get to our stats here. I'm able to see that through Canva. But so views and listens over the past week, guys, it's going to be US, UK, Australia, Germany, Canada. Top 3 episodes. We had that awesome interview with Stanny from Aave. That was a good one. I know you like that one. We had Galen's episode has been going parabolic pretty much. I think it's at like 45, maybe 5K views. And then we had James Duncan over with a bridge talking everything DAOs. Upcoming guests this week, we've got NEM or NEM. We've got library.tv and then a TBD next week for Monday. We got Dimitri's desk clearly on Tuesdays and Fridays, NFT Live on Thursday. So we're bringing the goods this week, per usual, man. But I hope you guys enjoyed that little announcement drop that we had there. Hopefully, we can't have a good time with the LADS token. And shout out LADS, of course, man.
Boom. Yeah, man. Super exciting stuff. So yeah, we ready to kick things off with some breaking news.
Yeah, I've got some huge breaking news. Mike actually sent this down the pipeline, and it kind of broke through the crypto community. I think CoinDesk, obviously all the biggest news publications kind of posted this, but PayPal is picking up Paxos to supply crypto for new service. So obviously a lot of announcements happened in the past probably month and a half around PayPal and Venmo kind of getting into the crypto game, and it looks like they've chosen their suitor, and that's going to be Paxos. Paxos is essentially going to handle all the digital asset kind of like movement and custody and all these things for PayPal, so that they can kind of roll this out to their users. There's a lot of information. I'm going to go ahead and drop this into the stream so that you guys can see it. Ton of information here. There were a couple other suitors. I think Coinbase was involved. There was Bitstamp, I think, was involved for a little while. But basically, what you have here is a non-confirmed story that PayPal is going to be using Paxos. So I think there was an announcement probably last week that this Paxos crypto brokerage, which was I guess launched last week, it announced its first customer, Revolut US, which is going to be a UK-based fintech firm. PayPal is obviously a huge win for Paxos. There's going to be a lot of users that are brought into this space, a la kind of Robinhood. It's going to be interesting to see what tokens they roll out with first. Clearly, Paxos, I think if you can read this here, it says New York State. They have a New York State trust charter, qualified custodian, legally permitted to hold gold, digital assets such as Bitcoin and Ethereum on the institutional investor's behalf. So big news, obviously, coming out that Paxos is taking the win here. What do you make of Paxos getting a big W here?
Yeah, no, that's awesome. I've always been a fan of Paxos in general, and it's a huge win. They could have went with other players as well, but I think it's a good way to introduce Paxos into the platform, where there's obviously so many existing users, and also at the same time, you first giving them access to the stable coin and the gold, right, exposure that they have the product, the Paxos Gold. So you start with that, and then maybe slowly start adding some other things. So as far as crypto goes, but I think that's definitely the best play to introduce that to the users first through a non-volatility token, stable coin, and then also something that's backed by gold, which is like nowadays, man, like fiat is not backed by gold,
Yeah.
So like I think it's a very good win. You said it's unconfirmed though, right? So it's still kind of in a rumorville.
Yeah, so basically on this CoinDesk article, they had multiple times reached out to a couple of different parties. I think it was Coinbase, it was PayPal, as well as Paxos, and none of them kind of got back. So I'll see if I can find that when we're on air here. But yeah, man, I mean, obviously PayPal and Venmo kind of coming out with crypto services is going to be huge. We've seen the kind of, I don't know how much, Robinhood being, I mean, is there any tangible way where we can say Robinhood has had this effect on the spot market? I don't know. Maybe they have, maybe they haven't. Maybe you have some more info there, but we'll see what PayPal and Venmo can do going down that same route. So
Yeah, I think it's important to kind of think of like the Cash App as being like the first one who start doing it, and obviously the other players like PayPal and Venmo, they see, hey, Cash App is making a killing of of this setup, right? So how do we enter that kind of same space with our current user base? Cash App obviously provides like the Bitcoin exposure, right? So, but like they're saying, hey, listen. Well, we're gonna start with like Paxos stablecoin and that first, and maybe we'll start introducing the others as well. So it's kind of that slowly get into crypto type of environment for their users without just dropping like straight crypto like Bitcoin and having that in place. So I think I like the approach there.
yeah, so the other options here, well, I guess based on just like from a stablecoin perspective, obviously Paxos has that Pax USD, but like this is a whole nother service. This is just a brokerage firm that they recently launched, so it has nothing really to do with that stablecoin. So based on like competitors, you can't say Gemini was in the running for this, but so we got a ton of comments, man. I want to get to these. Crypto Pickle kind of dropped in here. We got Shun, Monos, all the regulars, man. All the lads are in here. Brandon. There's a couple questions asking what the announcement was.
I dropped the link.
Did you drop the link? Do you wanna tell Crypto and the rest of the guys showing up late what the announcement was?
Yeah, we're setting up a LADS token, so it's going to be used to reward our community, basically for interacting, and being with us. So the utility of that token is going to come here shortly, where we're going to describe certain things you can do. Like one of the things I mentioned, like when I do the desk, you guys can use some of your LADs to maybe cover specific topics or specific tokens that you want me to take a look at. So interesting stuff is coming through. This LADs token is going to be like a point system, basically, for the community. And then also we have the predictions, right, that we're going to be doing on BTC, which we do that on a weekly basis, so you can earn some LADs if you win essentially the prediction game there. Doesn't look like I'm gonna win much, though, given my previous prediction.
We might see what the initial distribution looks like for Dima, but I can't wait for like a leaderboard again. We've already talked about this, but a leaderboard seeing who's earned the most LADs, and then based on that leaderboard, we can give different rewards and things like that. This is gonna be like an evolving thing with the utility of this LADs. I think the whole social currency movement is evolving. It's very fringe at the moment, but it's good that we kind of have talked with the team at Roll. They've kind of shown us a couple. I think Alex Masmej rolled out his, although that was more of like an investment rollout where he was doing a raise. We're certainly not doing a raise. So Kieran's asking when buy side liquidity. Dima, you setting that up?
Yep.
But so we've got the rest of breaking news. We're gonna fly through this here, and then we'll hit quick news and jump into discussion. A lot of this has to do with DeFi this week, guys. We obviously DeFi's taken over the past kind of month and a half, even before that. So we will see what we get into with DeFi. Love the comments that are rolling through.
Yeah, man. Let's keep on rolling. So the next piece of breaking news that I have is, so Wirecard. If you guys remember, this CEO basically exit scammed. This guy is unbelievable. It's a German-based company, Wirecard. If you remember, basically they came out saying, "Hey, listen, we lost $2 billion. We don't know where it's at." Seems like an accounting issue, and and then next thing you know, the CEO is nowhere to be found. He left, and the articles and more information that's coming out now is saying that he actually has a pretty substantial amount of Bitcoin, which is probably what he used in order, to kind of hide some of the funds that are missing now, the $2 billion. So it's like. And it talks about how overall the CEO, John Mersalik, so he, basically talks about how he's always been into cryptocurrency and discussing cryptocurrency and the privacy. And he actually talked about how like you can actually hide transactions and move money, right, before, and it's like, and he actually like ended up doing it. So it's like, what? Like, you crazy. So basically they're trying to still track him down. There's obviously, some serious investigations that are going on right now because it's a pretty substantial amount of money that is missing. And it seems like a lot of some of the speculation that's coming through is saying that, hey, maybe he moved to like Belarus and Russia to hide there, because they're saying that there's some evidence or some information that FSB was like following him, and that maybe he's somehow involved there, and how basically he's hiding in these countries where,
Mm.
like for example, Belarus, that had the same leader for like ever. So like it's interesting to see how sometimes some of these people that do certain things end up going to like Eastern Europe to like hide there, right? So we'll see what's going to happen, right? Obviously this is ongoing investigation, but it's fascinating to see like Wirecard, it's like operated a German company, it's well respected, and obviously in the environment where it's regulated, um it happened to them. Like, it's
Mm.
crazy. Like, so that's basically the piece of news. It's just an update on a Wirecard situation there. It looks like the guy is on the run. He, if he did end up, buying Bitcoin or whatever, or pushing the money through cryptocurrency, that's a pretty substantial amount, to do that for 2 billion. So
Mm.
if he does have 2 billion worth of Bitcoin, then, if he dumps, that's not going to be good for the market. But it's all kind of like rumors. He obviously sounds like a sophisticated guy, so he'd probably be unloading that,
Yeah,
like through a longer process, and maybe through privacy coins and so on, right? So
yeah, we've got some different news with Zcash. Obviously, Monero's been pushing out some updates too. So, speaking of privacy coins, we'll get to those in a second. We had a bunch of Twitter. We didn't want to put this in the breaking news, but we couldn't really find a place along our dashboard. But we're going to talk about these Twitter hacks here in a second. Basically, as you guys know, Twitter had kind of like it definitely wasn't like a user by user account, because so many different users got hacked. It definitely had to do with Twitter's mainframe, or some type of hack of Twitter itself. Obviously, a ton of different celebrities got hacked, and they placed Bitcoin addresses to their communities. Essentially, they had. I mean, you're talking about hacking people with 30 million followers, things like that, and then you have Bitcoin addresses being placed to kind of. I don't even remember the exact tweet. I'll try to put a tweet, but basically they said, here, send this Bitcoin and you'll get some back, or something like that. Obviously the crypto community kind of took that up and were like memeing the addresses and things like that. So we had a ton of that kind of come through. I think we're going to talk about specifically mixing Bitcoin. I think the kind of guys that went through this hack obviously got a substantial amount of BTC, although there were a ton of people that were talking about this that said they could have made way more money with this hack. They chose to go the route they did and earn like probably what I think at the end of the day it was like 12 to 15 BTC.
yeah, it's like this hack, man. I have mixed opinions about it, right? So it's like these guys obviously hacked so many important people, right? And the thing they reverted to is to do this typical classic crypto scam, which is like you're trying to scam crypto people when we've been watching these type of scams for already a very long time, right?
Mm.
We know this type of scam, right? So most of the crypto people know that, all right, there's no such thing where you like send a certain amount of BTC and then you get more back. Like, come on, no matter who it comes from, especially when it comes from like Obama, like, come on, man. And then like people that follow those figures like that are not in crypto, they don't even know what the hell that thing is. It's like, so it's like, I think it was a total fail on their end to capitalize on this. They made like a little over 100 G's in dollars.
Mm.
Now it's starting to like kind of get mixing, and they're trying to wash it to get it cleaned out, because obviously those addresses are going to be blacklisted and so on. But yeah, it's like they and also there's rumors that the guys who did it are actually not the ones who designed the exploit itself. They actually ended up buying it from somebody.
Hmm.
So it's like how much you pay to gain access to all these accounts and how much did you bring
It's an
back,
amateur job, man.
Yeah, like, come on. So and also, so like for those that might not be aware, so the reason why the whole thing like actually worked, or like why this hack occurred, is because um Twitter has this feature where you can enable third-party applications to schedule basically tweets.
Hmm.
So, and that side of it was exploited. So the third party company that is connected
I see.
to the API to Twitter is the one that got hacked, and they start scheduling these tweets on all these accounts. So that was basically a vulnerability that they showed in these third party apps that are connected to Twitter. And to be honest, this is like the best case scenario in terms of how much damage it did, right? Because like for the bounty, basically to close this loophole, we paid 123,000. Like that could have
Hmm.
been way in the millions,
Yeah, Lee was in the chat and he was saying something like getting access to Trump's account, or however, like you said, getting access via this third-party exploit and getting access to Trump's scheduled tweets, and putting out something like where the U.S. is going to ban all Bitcoin and then going the short side of that. They could have
Yeah.
made much more money based on that. So I know there's a ton of other options that route. They kind of chose the amateurish road there, and I mean, they got a payday. We'll see if they can mix. So the actual story that we have here is the Bitcoin going to like different Wasabi wallets, which I guess have the mixing component to it.
Yeah, exactly. Yeah. So looks like they're tracking like the movement of Bitcoin, and it's typical. It goes through the mix
Mm-hmm.
and then it gets essentially cleaned. It's still fascinating. I guess I guess it makes sense. Bitcoin is still being used, kind of the primary, to do these type of things, which is like because of the available liquidity. I'm surprised like tokens like Monero or more privacy tokens are not benefiting from this, even though it was interesting that I think it was Zach who posted that as well, where
Mm-hmm.
if you take a look at the TX, some of the transactions that were done to that address, somebody sent over a message basically saying, hey, use Monero to do this, right? Which is an interesting marketing way of Monero. But yeah, I'm surprised that actually, Monero and some of the private coins are not the ones that are like benefiting from something like this, or are not being utilized more, right, for something like this, because we see more analytics that are being created for Bitcoin and monitoring of transactions and so on. So like it's becoming harder and harder basically to use Bitcoin as a way to launder and scam and so on.
Yeah, as the analyzing tools have gotten better, I feel like you're correct in that statement. So we do have a bit of quick news here, guys. We're going to touch on Zcash. We're going to hit a little bit of Synthetix, and we've got Republic still in the news. But Zcash is definitely one of those privacy coins that you mentioned. But before we get to Zcash, let's look at the Shun and Kieran's chat that is absolutely taking over the Layer 1 channel here. They're talking about Bakwa. They're talking about where to find Bakwa. There's is it a drug in the chat? There's definitely a lot of things going on
There's
in the
like
Layer.
drug transactions going on in chat, man.
Yeah, send Monero address.
Yeah.
Yeah, you got found out, man. So Brandon's in the chat. What's going on, Brandon? Hey, before we go any further, too, we wanted to give a lad shout out. This week, Sahil was a big time contributor in the Telegram channel. So just a quick shout out to Sahil. So I got a piece of quick news here. We're gonna touch on Zcash's latest hard fork. So the TLDR here is basically the hard fork Heartwood is allowing Coinbase, or I guess Coinbase mining that's happening on the Coinbase application and platform. The miners that are mining there are able to send now transactions that are shielded to the wallets. So they're able to mine via Coinbase and be able to send Zcash via this shielded Coinbase upgrade that they did. The second part of this is the light client. I guess mobile is pretty hard here for Zcash, or it has been. So this Fly client update was announced. It basically allows users to verify transactions with the smallest amount of information possible. So they're trying to upgrade the Light client as well as providing private transactions for those that are mining via Coinbase. So that's pretty much quick news on the Zcash front. Speaking of Zcash, Komodo's done a pretty good leg up here over the past probably 7 days, which obviously Zcash or Komodo is a fork of Zcash. I don't know if I think we had Komodo back on like a month and a half ago, but definitely good to see Zcash continuing their updates. I'm not a personal investor in privacy tokens, but I can see the utility. I can see the fundamentals there for those that are invested. So
Kieran is saying, sir, if you take the same hot take that the Twitter noobs are talking with the Zcash privacy, I'm a flip. Anyway, so moving kind of right along with these quick news. The next piece of news, so Synthetix, obviously making big headlines, and I've been talking to Kain also. From the last interview that we had with him, he talked about how they were working on creating this decentralized platform for trading that's going to offer like perpetual swaps, kind of in a way like BitMEX, decentralized like futures exchange. And that was back in the day when we had him on. And now there looks like they're moving forward with announcing dHedge, testnet trading competition, and also it's basically the platform that they talked about, powered by Synthetix. And I spoke to Kain, I believe like a week ago, because we wanted to get him on the channel again, and he said that he's wrapping up this platform, and then he'd love to come on the channel after that to discuss that in more detail. So that's something that's coming down the pipeline. But the announcement here that they had, so dHedge, testnet trading competition powered by Synthetix, it basically offers the non-custodial mimetic trading for synthetic assets using zero slippage and infinite liquidity trading model of Synthetix. So, Kain obviously understands kind of the future of trading, where things like slippage, liquidity becomes very important in crypto trading. So they're essentially have this platform rolling up in testnet, where they're incentivizing users to get in and basically use it, try it, and try to break it before they start releasing it, the official platform once it's ready. And just keep in mind, the Synthetix and this dHedge, it is backed by some of the biggest players as far as the capital goes. 3 Arrow Capital that's invested in this. So it's projected to be a quite big thing once it's going to be rolling out. But you can first place earns like they have their own token, dHT. And then you can earn dHT, and you can also earn SNX with it. So I'll drop the link for the competition for those guys that are looking to check it out. That's something that would be very interesting. Obviously, big fan of Kain and kind of the things that they're doing there. So can't wait to have him on the channel to break this more down and talk about when is the potential launch of the the real version is going to be.
I love this kind of incentivized trading competitions that are kind of more decentralized in a way, where you kind of have like an open competition where you're just connecting your Web3 wallet. You're using kind of these open source and open and available kind of analytics or different information. The first place is also pretty cool. You got the third. I don't know exactly what the price of dHT and Synthetix is at this moment. I know Synthetix is trading around 350 the last time I checked. But this first place where you're getting 37,000 dHT, 1,500 SNX, and your own channel on dHedge Discord. That's pretty big, man.
That's clout right there.
That is some clout, man. So you'll see Dima on the dHedge Discord trying to make his way in to that first place spot. But anyways, man, we've got Kieran breaking down Twitter Zcash transactions. So if anybody's interested in the inner workings of kind of mixing transactions. That is happening in the channel right now. Go to the chat. He's breaking it down while we're breaking down quick news. So we got one more left. We got some info on Republic. What's going on there?
Yeah, so Republic is basically launching a token. Surprise.
Yeah.
So so basically Republic, for those that aren't aware, it's a platform that helps startups raise funds, and they're launching a token that's going to give the ability for the investors to basically invest some of these startups and gain like a share of whatever their business is. The cool thing about it is that it's essentially gives you kind of like exposure to the basket of startups rather than investing in a single startup. So this way, when you're investing in this token, you basically exposed to the overall basket of the Republic startups that are going on. And then past that, essentially you're going to be paid, on the success or the failure of those businesses. We know that overall startups are very risky and most of them kind of fail. So, but we do know that VCs still make tons of money because what they do is they grab a bag of these startups and most of them fail, but the one or two that do succeed is what ends up adding to their bottom line. So that's the idea for the Republic, is to create this token so it gives access to people to kind of have exposure to the basket of these of these startups, and then startups obviously are gonna have more access to like capital from Republic itself. These guys worked with like Robinhood. They're pretty big. I believe they started in like 2016. The one important thing though to keep in mind is that even though this token is going to be rolling out, you have to understand that it's also going to be only for accredited investors. So if you're not a credit investor, then you cannot participate in this. And the minimum that you can buy is only $100, which is pretty cool. But it's still the credit investor barrier is there. You know what I'm saying? So kind of take that with the grain of salt. But it's interesting. It's always good to see something like this roll out. Obviously, in a regulated way. Like
Yeah.
So something where it's like a company like that rolling this out, or we finally have kind of a legitimate structure for this. We've been talking about how the overall industry can benefit from these type of setups, but we haven't had like major players kind of come out and make waves. So good luck to them.
Yeah, community pool of accredited investors is an interesting take. Also having $100 minimum, so those accredited investors can. What is $100 to an accredited investor? Not too much. So we'll see the appetite for those trying to get into a pool as opposed to kind of taking on personal investments or things like that. So we made it to the discussion portion, guys. We got about 17 of you in the chat. We appreciate you guys following along. Layer1Live, we're obviously bringing you the latest crypto news. We've hit the quick news. We hit the breaking news. Obviously, PayPal coming out and tabbing Paxos is the biggest news from I guess the last 24 hours. But we also had a Layer1 announcement. We are coming out with that LADS token, which we will be putting out more information on our Substack. You're able to go over to our Twitter right now and see the initial blog post if you want to take a look. But we will be kind of coming out with that here over the next week, and I think Monday is the actual launch of the token. So are we coming through okay, Dima? Uh-oh. Am I coming through all right?
Nah, you're lagging a little bit.
Okay. Yeah, we'll see if we can
it looks like you're good now.
Okay. All right. Well, we'll see if we can kind of get through. It doesn't look like it's coming and affecting anything on my end. But basically, we'll kind of dive into discussion here. Appreciate you guys following along. Basically, guys, we're talking DeFi here. So the discussion is going to be around a recent tweet from a CeFi. I think he works at FTX. A CeFi employee kind of coming out and kind of taking a dig at what's happening with DeFi, whether it's sustainable, and then Kain actually coming back with his own thread and response to the actual thread. So we have a little bit of that. We'll break down that here shortly. I'm going to pull up the Twitter, and Dima will give it a go.
Yeah. So obviously, a lot of people are kind of picking at DeFi and trying to find, certain things of, not necessarily issues, but kind of provide more clarity of how things are. But also, because it's a very rapid growing sector, and we've talked about, when we had Land on, we've talked about how these type of sectors, when they grow rapidly, they tend to kind of move fast and break things, right? So everybody's afraid, kind of things unwinding, how like perhaps maybe those tokens are overreaching valuation and so on, and blah 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 and all that stuff. But the specific point that he was trying to explain here is that the overall, the trading volume that we see that happen on these platforms is kind of like related to some of the wash trading that we've seen previously on the exchanges in the past, when we had like a bunch of tokens getting listed, and there's a lot of wash trading that going on and just regular type of exchanges that we aware of, like Bitfinex and so on. So he's kind of relating to that, where, and then also explaining, well, the whole reason why DeFi is blowing up is because people are basically borrowing and lending to each other, to themselves,
Hmm.
and to capture some of the arbitrage and capture some of the liquidity incentives that are in place on different platforms, and basically proceed that way. And he talks about how some of these organizations that push so much volume, they're basically showing zero in terms of revenue that they
Hmm.
collect, which is like another thing. Well, when you had like Bitfinex and other exchanges that were pushing a lot of wash volume, but they were making ridiculous amount of commissions, right? So the commissions they were getting, so that was pretty much the bloodline for this, right? But on the DeFi space, it's not, it's not the same.
Hmm.
So it's set up in a different way, and that's kind of like what what Kain's tweet was going over, um is that it shifts the incentives for the liquidity providers to really make the money instead of the actual like organization itself. So it's a different perspective of um like the DeFi exchanges are structured, and how they earn revenue, instead of having one single platform that earns revenue. You have that spread between all the participants in the ecosystem, and each one is getting kind of the incentive to do their piece of the job. That's kind of like what we've also talked about with Lend.
Hmm.
When we talked about liquidators, if the volatility hits and liquidations start happening in DeFi, how do you get these liquidators to come online when the volatility comes through? Because we've seen in the past, Black Thursday, when volatility picks up, liquidators dipped out because, well, first of all, the gas prices were ridiculous and so on.
Hmm.
um, so like they've set up incentives for liquidators to be in place should something like this happen again. So slowly, kind of DeFi is patching up some of the holes that like were shown in the past, um, with some of the market movement that occurred, in crypto. So it's very interesting, kind of explanation of and a take from from this guy about
Hmm.
how where certain things are in terms of the governance tokens, going up in value, uh, and liquidity providers continuously getting incentivized, and there's a lot of arbitrage that's happening, which kind of also brings to the point where it's like, well, since we have so many different lending and borrowing platforms in DeFi that are popping up, that opens up a lot of arbitrage and things that you can do creatively. Where, like I said, you can borrow and lend, from yourself from different platforms to capture the arbitrage. Eventually, once that gets saturated, then that arbitrage kind of fades away, so everybody's chasing that alpha for the moment being while it exists. And eventually what's going to happen, obviously, most of the, not most, but like a good amount of these players, that DeFi platforms that might you know get out of business later on, when we get the market consolidation and we have serious players that remain in the space. It's just right now. It's a very hot sector that's growing rapidly, and it's gonna grow until essentially the market conditions change. And right now, that's the way you play this game.
Yeah, it's such a large conversation, this DeFi like kind of talk, right, that we're trying
Yeah.
to have here. It's trying to call the top on what's going on. Some people are calling it scams, while other people call it innovation. Certainly, that's kind of what's going on in this thread. I dropped both of the links. So the first one is from the CEO. I said employee, and it was the CEO of FTX, that crypto derivatives exchange. And then you had Kain kind of coming back with his response. And I guess the TLDR here is that Kain's response basically was saying that DeFi is creating products that actually benefit the user in the sense of revenue, right? So
Mm-hmm.
when Alameda came out and said, "Hey, nothing's all of these things are like," and he literally used the word circle jerk. It's a circle jerk where
Yeah.
everybody's like kind of getting revenue based on this liquidity and incentivizing liquidity, and you kind of have that yield farming. That's basically what's happening, and there's no revenue being created for Uniswap, for Curve, all of these things. And Kain came back and said, actually, you're viewing this in the lens of a centralized exchange, right, where you have to have this company that needs to produce revenue, or else it kind of implodes on itself. Well, Kain came back and said that actually the way DeFi products are being created is the actual liquidity providers are making money on Uniswap, and that's not being seen in the revenue information. So where CeFi is kind of creating a product, hopefully getting paid off in the end, and I think that does happen with the governance token in DeFi now, right? Like if you talk to the MakerDAO guys, talk to the Lend
Mm-hmm.
guys, all these governance tokens are essentially going up 2,000%, and they're able to have their big payday whenever that may be. Now that's something you warned me about. Not only the Lend team, but Three Arrows Capital. We saw Framework getting in on Lend
Mm-hmm.
even as early as next week. And I was asking you, man, like I got Lend at 23, and now it's up to 36. Like, what should I do? He's like, well, listen, like it's almost at all time highs. Certainly, it's definitely tough to like make a valuation play based on the all time highs set
Right.
in that run up, but still, it's about to hit all time highs. You got all of these guys who are already up like 3-4x, at least that, and not even talking about the guys who bought it at the lower valuations, and you've got 2,000% and things like that. So basically, that being said, I completely got out of my Lend position based on what you told me, and it has paid off. I think it's just a huge discussion, and I think the chat's blowing up. But there's so much discussion around: is this the top? Is this another ICO market? One of the questions you asked Stanley was: is there going to be some type of credit bubble that comes from like
Right.
stacking all of these different financial services on top of each other? I don't know, man. It's a huge discussion. We'll get to some of the comments here in a second, but just from your initial, like Kain's reaction and Kain's thread, what side were you on? What side do you tend to lean towards more?
Yeah, I like the way Kane explains it, and you said it right. Where he was approaching more from centralized, setup, where it's like, well, how does a company make their revenue? But Kane, did a good job explaining kind of that, that's not the way it's set up. He basically talks about aligning incentives, kind of for the game to create like both sides, liquidity
Mm,
providers and the other parties to be able to participate here and have sufficient liquidity in the overall platform. I think right now, due to the structure of DeFi, and DeFi is very experimental, obviously. Right now the way it's structured is that it's attracting a lot of liquidity to it, right? And then eventually it becomes where it's like, well, there's so much liquidity there, and it's obviously very good. But maybe the incentives are going to start dropping because there's such abundance of liquidity already,
mm.
and the use of it is not matching that liquidity. So I think that might be the correction phase of it. But Kane actually brings up a pretty good point. It's like, well, can you imagine, it's like, let's say Amazon, right, got started, and then they have these vendors that sell product on Amazon, and the vendors themselves make way more money than the actual company, right?
Mm-hmm.
That is kind of the setup, right? We have the company, and then you have those that are liquidity providers and those that are actually providing product inside the platform. Those are the ones that make way more money than than the actual platform itself. So I like that explanation, where he discusses those side of things. But yeah, it's hard to say where we're going to go in terms of token prices for these lending
Mm-hmm.
platforms. Right now it's obviously it's going much higher, and you would not want to be shorting this, obviously, because in trends like this, everybody wants to pick a top, and be that smartest guy in the room, where they're like, oh, this is overvalued, I'm gonna sell it, that's it. But in these type of trends, you never know when it's going to stop, when it's going to start correcting. So the best way to kind of trade it is on a short term basis, momentum based, where it's like, for example, like what you did, you got in, you're like, okay, I 3x'd, I'm out, like I'm good. Because a lot of times people in crypto get blinded by greed, and they end up kind of sitting on their positions for a very long time. And a lot of them end up kind of stuck with the bag once the big boys unload
Mm-hmm.
some of their portfolio capital, like Three Arrows or Framework guys. So
Yeah.
there's a huge risk, but there's also a huge opportunity, right?
Yeah, definitely, and I think it's definitely important to point out that a lot of investors in this space, from a retail perspective, you need to be aware of all of these big time investors that have put substantial amount of capital. When they go 2-3x, it's kind of hard for them to come in and say, hey, like, I'm not going to take profits here. So I think it's a good point. It looks like the connection's unstable again, so we'll try to work through that.
Yeah, it looks like it's better now.
Yeah, I've got some quotes from Kain I want to go through here, and then we'll touch on DeFi a little bit more. I think we can stay in this discussion for a little bit more, and I think there's some good discussions happening in the chat as well. If you want to find some that you want to talk on specifically, but as far as like Kain's tweet thread, kind of tweet storm here, I would just you can go, guys, and refresh your YouTube page and see all the links. And Kain's tweet is one of the links we have. But basically, he says with these DeFi coordination games, the incentives for founders is likely going to be getting an upfront allocation of governance tokens. Dimitri went through this already. He said, which I think is totally fine and good. If we have no incentive for founders to experiment, very little experimentation will happen. So again, kind of going on the point that they're creating a product and not seeing any revenue other than this governance token. He ends with talking about kind of this paradigm shift where he's saying firms have undoubtedly been the optimal coordination mechanism for capitalism, but smart contracts are a new enabling technology that could disrupt this. And then he goes on to talk about the nature of the protocol, which I haven't clicked in myself. So I think there's another point to put up here too, and that is Uniswap. And obviously we were here for the ICO boom, and certainly it was relatively easy to get into ICOs back in the day, but dude, not as easy as it is to use Uniswap now. Like, Uniswap is an X factor in what's going on in the crypto industry right now. It's so easy if you even if you don't understand the interface. It's a 2-click process to move from token to token. Now you can touch on the liquidity pools that's how people are, getting revenue essentially from this, the users. So a user or multiple users or many people will set up these liquidity pools so that when I trade from ETH to Lend, someone is actually getting paid to provide that liquidity, and that's not the Uniswap protocol. They're not charging a fee for that. It's on top of the liquidity providers instead. But it's such an easy process that I think that is kind of funding this degen movement of like, I got 2,000% in Lend. Let me put 10K that I made out of the 20 or 30K that I made, and let me put that into the next DeFi project. And how easy is that? I don't have to wait for a time frame. I don't have to do KYC. I don't have to go through this exchange interface and know and understand everything that's going on with that. It's 2 clicks, and I go from Lend to RSR or Lend to Luna or any of these other DeFi projects, and people are just going down the lines and saying, same way as ICOs, where they're just going down saying, okay, what has a market cap of 50 million? What's an underrated token at this point that has some type of DeFi narrative attached to it, and they're just moving from straight from whatever token they took profits in into maybe a stable coin, and then some of it they're putting into this next DeFi movement. So it's there's so much discussion around here. I tend to side with the guys who are creating and innovating more so than the guys who are kind of, I wouldn't say complaining, but kind of looking at DeFi as this Ponzi. That's just the way that I look at it.
Right. Yeah. It's obviously, it can be a very long discussion in DeFi in terms of kind of where it is and what is your opinion about certain things. That's why I wanted to get Kain on, because he's very good at explaining from his side kind of what he sees, why certain pieces are positioned this way, why liquidity providers are getting incentivized, and why it's needed, and so on, right? But it's interesting to see when we come across like something where it's like yEarn, when an article comes out saying, hey, the founder of it saying that they're gonna do this token, YFI token, that's supposedly basically just for governance only. Like he said, this is a worthless token. It's not going to be listed on Uniswap. This is literally just to distribute the shares of governance to people. And what ended up happening, obviously, somebody listed that token on Uniswap. And of course, it started trading and went up 4,000%. It's like, what in the world? It's like insane. So and again, this guy is like coming out and saying, man, like, I'm literally just trying to create, a governance distribution token. That's it, just shares. I'm not looking to put a value on this and have it traded. But obviously, due to the nature of decentralization and how things work, right? We can have other players that start, putting that on exchanges and have that value kind of fluctuate there through the trades that are being done on the platform. So it's out of the hands of the issuer at that point. So never know. Maybe Lad's token will be listed on Uniswap and went up 4,000% too. Like, but that's definitely not the
investment
intention.
advice. That is not investment advice. We're not raising, guys. Come on.
No, yeah.
They're gonna go direct. They're gonna go to that timestamp, and that's gonna be.
I know, right?
That clocks us out. I've got CoinGecko pulled up here. We can kind of go through the runs that some of these coins have made. Obviously, Lend is definitely one of them. Chainlink, which is loosely, so they kind of provide oracles for the various DeFi projects. So basically, guys, this movement has created some of, I think, future financial, it's kind of like creating future financial infrastructure via smart contracts, and kind of changing the way that people will eventually use money. But in that, there's going to be some mistakes. And just like ICOs, and I'll use that as an example because we were in it, there's going to be a lot of this shit that doesn't work out. There's going to be a ton of people that get screwed. But I do want to get to one of these questions. And Shun, for example, he said maybe you can elaborate on farming. And I think there are better people to answer that question. But what's happening there and what's happening with DeFi in general is you're creating these new financial products that have never existed before. And a lot of it looks like a Ponzi. But I think if you opened up the traditional financial market, I think some of it might look the same. And people don't take that approach because it's closed source, right? Because it's behind closed doors. But you're basically creating, you're recreating financial products using smart contract platforms. Some of it looks super scammy, and then some of it is super scammy. And I think you'll find some, people will eventually use these products. I think what Aave is doing with Lend is a great example of that. Where you have like credit delegation and things like that. That is something that may look a little bit different in the future than what it does for right now. You can get credit, reputation, you can get lending and borrowing, and not have to deal with a bank. That's essentially how I see DeFi. So I don't know. What do you think?
Yeah, I was gonna say that what you should do is go back and watch the Lend interview, because he definitely describes like interesting incentives and things that they're doing, and how it's kind of helping the ecosystem. So for example, like one thing that's like, well, these wrap tokens, right, synthetic tokens that give you exposure to, let's say, a product. One interesting thing that he mentioned is that, well, if you, let's say, buy this one synthetic wrap token, and it has like interest set up on it, right? So it's marked as interest bearing token, where it continuously gets interest on, let's say, BTC. And you can send that synthetic to a different person, and that other person is going to start getting those incentives of that BTC. So this way you don't have to set up in a way where it's like, well, if I have my BTC on, like, let's say, Celsius that's earning interest, I would have to get out of Celsius and send BTC to somebody else, and then they would have to get into Celsius and set up their lending to earn interest. Here you just bind that synthetic token and you send it over to the next person, and it's automatically already getting the interest as well. So without it just smooths out the whole process. So it's like one of the features that are pretty cool that DeFi space is doing. But the farming itself side, it's obviously quite complex. But to put it simply, it's basically lenders and borrowers, right? So you're lending on one platform, borrowing on another platform. So there's an arbitrage there. But if you don't understand it, and the kind of risk associated with it, I highly recommend to, stay out of that space, because it's getting quite hot, so there's a lot of competition there right now. And the more players, the more sophisticated players are getting in, the less of an alpha that is going to be out there. It decreases basically substantially the more players are utilizing the same type of arbitrages and so on. So
yeah, I guess there's a ton of ways to kind of explain it, and Dimitri did a good job there. But DeFi farming is the ability to reward people for providing liquidity, right? But the issue that you have here is that a new platform, and I think people have talked about this in the chat, where you almost have a DeFi inflation going on, where there's only so many users, although those users are maybe increasing because so many gains are happening and people are taking a hard look at the space. But you have this lending and borrowing going on, and you are able to incentivize that lending and borrowing. You're able to incentivize people to put their capital and lock their capital into your platform for certain yield, right? Everyone's chasing yield, especially in the environment that you see in the macro markets across the world. 15%, holy shit, and I can do this, and I can and the rehypothecations is where I probably stumble, where I can lock. I think Synthetix, that process kind of threw me through a loop where I can lock ETH and then use the SUSD to then get more ETH. It just seemed like it was kind of like house of cards almost. But there are some people, building cool things. Man, I've got some major issues coming through on my internet side. But basically, guys, DeFi farming, I think Shun was the one that asked it. It's just incentivizing liquidity and people to park their tokens on a certain platform, and people are getting rewarded for that, as opposed to maybe having your money in the bank where they're rewarding you for that, but not as much, certainly from a yield perspective. So I'm gonna look to get this.
Q is getting DDoS attacked.
I think so, man. I'm gonna try to figure this out.
Like they're trying to hack your LATS tokens. So yeah, again, just to kind of wrap up this DeFi section. So another piece of news that came out. So the day after Lend received some investment, we interviewed them, which was beautiful. So they received $3 million that was invested in Lend from 3 Arrows Capital Framework Ventures. So obviously they see a huge opportunity in the market. You have those two players that are basically, they like the DeFi space. They're investing quite a bit into DeFi space, and when we talked to the founder, of Lend, I asked him what is the overall landscape, right, for venture capital in DeFi, and his answer was actually quite interesting. He's saying that there's actually a lot of capital right now that's specifically targeting DeFi space, which is kind of like almost too much, right? It's very like concentrated on, how much money is being thrown at the DeFi at the moment.
Hmm.
Which is like something that happens usually when you have the cycles of hype, when ICOs or whatever. I hate to make that, comparison, but
Hmm.
anytime there's a hot sector that comes out, the capital groups are pretty quick in ventures, are pretty quick in jumping on board because they know, they can extract quite a bit of value there, as this thing continues to kind of flourish in current market conditions, right? So
Yeah, I don't think comparing it to the ICO market is, or what we saw with ICOs back in the day, even as early as like 2015 or 16, is that bad of a comparison. I think it's actually good because what we will likely happen, what we will likely see happen, which is kind of what we're predicting, is essentially you're going to see the same kind of cycle where you have this initial run up of good projects, and those are going to have like take a good amount of market share, and then what you'll have is a ton of like a proliferation of these projects, which is kind of the mode we're in now, right? Everyone's trying to launch their DeFi platform. Another thing that we haven't touched on, but what I think is important, is as we see these Ethereum gas prices rise, what's going to happen with other protocols, right? Other protocols, Aava's launching, Avalanche. There's a couple others that are launching. Kava's another good one. They're trying to launch a protocol to have DeFi platforms there. It's like who can capitalize from Ethereum's kind of missteps if the gas prices get out of control, right? If the gas prices start being larger than even the asset that you're trading, then you kind of run into some issues. So,
yeah,
but
absolutely, yeah.
but like we saw with ICOs, I mean, there's going to be some that come out of this on the other end and create. I mean, Ethereum's an ICO. Everything that's being created now, for the most part, is on top of Ethereum, which was an ICO. So what you'll see is a proliferation of these, DeFi platforms or DeFi protocols. And then, at the end of it, we'll look back in 2 years and say, Synthetix made it out of it, or Len made it out of it,
Yeah.
and we'll go from there. I don't know.
Yeah, and I think like the major difference. That's why I like, sometimes I cringe when I make the comparison. I like the comparison that, in terms of, yeah, we will go through market consolidation. Some of these players are gonna get out, stronger, and some of them are gonna fall off. But also, like, if you look at it in terms of DeFi, where it is, and compared to ICOs were basically a white paper, nothing there, right? That's it, bro. Throw money at me, and hopefully I create this platform.
Yep.
But for DeFi, the platform is already there, the product is already there, the function is already there, everything is there, right? Like, it's literally like a working product, right? So that is the big difference there. Um, that makes the DeFi, kind of a better place, than saying ICOs. But as far as the hype goes and market consolidation, yeah, we'll definitely see that the more platforms go online, um, you know, the more saturated it gets. All the arts saying Compound used to have 200K users, and now they have less than 700 users. So,
Oh, 2K, yeah.
yeah, you can kind of see how the overall users kind of shift around between different platforms depending on where they can extract the most value, what the setup is there. Because I read a headline there talking about super users, and Uniswap seemed to hold the biggest one. It was like over 1,000 of super users on Uniswap, that pushed the most volume, basically. So I think, and Q, you asked a very good question on the interview with Lend, where it's like, well, how do you retain those users, once things start kind of changing around and the alpha is not there anymore, to the incentives are not there anymore, right? So, and it's a tough question. It's like, most of the users right now are obviously, given the market that we're in right now, the speculative market, they chase the yield, they chase the returns. They don't really care about the platform, right? So it'll be interesting to see how, once we get to certain points where the DeFi space is going to get more and more sophisticated, where people are going to start caring about the trust, about the reputation, about the platform functionality, slippage, liquidity, execution, all those things that now the crypto community doesn't really care about. But that's something that is very important in traditional finance, in traditional markets, that eventually the market overall shifts that way, where all those little things are actually the ones, the incentives that end up retaining the users and staying in business. So
Yeah, I remember asking that question on the interview that we had with Stanley, and his response, like, it was okay. I think he kind of compared retaining users to the way people shop at grocery stores, which is an interesting analogy. I think he was saying that, people, obviously they offer rebates and they offer different kind of I guess incentives to shop at grocery stores, but people don't just hop around to every other grocery store to try to find the best deals. I think there's some truth to that, but definitely retaining users and having the stickiness to do different things within DeFi. We'll see how they end up retaining their users. We do have some questions coming through. So Heels in the chat. What's going on, man? I think Manos just touched on what you just said, which is, yeah, but what happens when the incentive tokens run out? Manos is saying lads made it out of it. Yes, certainly. We're launching in a bull market, man. We'll see what happens. Nudex is launching a DeFi box tomorrow for DeFi mining. That'll be interesting. That's obviously one of those dexes within the EOS ecosystem. We could have the DeFi talk for a long time. I think one of the things that you always say on Dimitri's that we've been saying for a long time is, would you rather be right or you want to make money? And I think that when you're in a market cycle like this and you've got the balls to do it, there is a potential to make gains and just chase the different narratives and all these things. But you really have to have the stomach to be able to do it, and then also kind of be able to do the research within that. So, yeah, crazy times. We don't know when the DeFi market will kind of turn. I think Lend kind of had a little bit of a dip from 37 to like 31. It looks like Sahil's asking for favorite DeFi projects. Do you have any off the top of your head that kind of makes sense at this moment?
Well, yeah, I kind of hate to say like the top one, but I think from just the conversations that you hear, on Layer 1 is Synthetix is a pretty good one. So I'm quite a fan of what those guys are doing, and obviously Kain, the founder, is a great guy. When we first had an interview with him, I was very skeptical and was ready to get down to very, very tough questions and see what these answers were, and he was very honest. That's what really stood out to me. So instead of trying to sugarcoat things and kind of like say, well, it's kind of not like that, and like trying to deceive you, he actually lays it out straight to you, right? Which I was very impressed. So yeah, Synthetix is it's definitely something I would look at.
Yeah, I think one thing to keep in mind, guys, is as these different Layer 1 protocols launch, I think you have an opportunity to kind of look at different dApps within, like a Polkadot. I think EOS is launching some. Vigor's done pretty well. There's like an opportunity to take advantage of some of these protocols or some of these dApps launching within these different networks. So looking within the Polkadot ecosystem for something that has some sort of DeFi play might be an opportunity as we see launch. I know Edgeware's done well. What's another Polkadot chain? Kusama's done well. So everything that goes along with these different Layer 1s as they are launching, that might be a good opportunity. I've got some pulled up here in front of me. I know we were talking about Luna. This is not investment advice, guys. This is just stuff that we're interested in. We've got Luna. We've got what else? What else do we have here? RSR is a token that I'm looking into, but definitely some good DeFi projects out there. Synthetix is obviously an easy one. I think Lend is doing good things. They're doing like a token restructure here shortly, so a lot of good ops to do those things. What's up?
As we're talking, I don't know what we said on the channel, but Link just dropped 7%. So so there's some volatility there for you guys that are holding Link. Definitely going to talk about that on the desk tomorrow. But interesting, some price action on Link. Obviously, we know how Link is working with DeFi, right? So
Definitely. Curve's got a token coming out. There's so many. I love this part of the cycle, man. I know it could drop at any moment, but it's awesome talking about, with earnest as opposed to like in the depths of a bear market where everyone's just got like red eyes and they just
yeah.
hate life. It's just like
I,
this.
I think it's just in general, like when we look at, let's say, bubbles, right? In general, like they're certainly not a bad thing, right?
Mm-hmm.
So, and you really have to think about it. Like the ICO bubble that we had, great projects came out of that. We had significant capital allocation to those sectors. If that bubble wasn't there, if people were not chasing returns, then the infrastructure investment would not happen. Same thing with DeFi.
Mm.
Since it's hot, yeah, it's become kind of like a bubble right now. It's a hot topic. Now you have more money being thrown at it than it would be if there was no bubble, right? So
Mm-hmm.
now you have more money, more infrastructure gets built out, and eventually, you have great products that come out of it. So bubbles are good.
Yeah, absolutely. I love
Yeah.
that take. All right. I mean, with that, we had some other comments to get to, but I think we're gonna move on here. We could spend time in DeFi for like the
Yeah.
entire time. The last thing I will say is I can't imagine, and actually I can't imagine because I've been this person, but like if you're on the outside of DeFi right now, man, like that's got to be tough to stomach, right?
Yeah.
If you're a Bitcoin maximalist or like an Ethereum, you're an Ethereum maximalist thinking that all these projects are building on Ethereum. Why isn't the Ethereum token price like increasing valuation? It's like, man, that's tough just to sit by and see, all the absolute gains that DeFi is taking in that same ICO hype cycle. So, yeah. All right, guys, we'll move on here. We've got Stellar, Ethereum, EOS, DeFi, which we'll touch on for a second, and then NFTs.
Boom. Yeah, let's roll. So let's look at Stella. So we talked about Abra, I believe maybe like a couple episodes back. And I specifically talked about how Abra got in trouble a little bit with the regulators in US. They were fined. I think it was like 100 and something thousand. But right after that, they actually ended up securing the funding from the Stella Foundation, which was 5 million. And now we have more kind of more information about how, like, where is this going to be directed and what they're going to actually do. So Abra is building banking solutions on Stella, and that's why they got some of the capital infusion from the Stella Foundation. The cool thing about Abra, like the way they're approaching this, so well respected, obviously, company and platform, but the way they're approaching this. His banking solutions, this will allow consumers, uh, people who aren't familiar with cryptocurrencies, to store dollars and earn significant interest on those dollars. So it's like, they're taking it a very good approach, because it's like, well, if most of the people don't really necessarily want to get exposure to the volatility of crypto and put money in there, as much as like people talk about, hey, listen, let's say Bitcoin is a hedge for inflation, and like, you store value and all that stuff. People are still not comfortable, right? If you look at the dollar itself, the volatility of the value of the dollar is, quite low. And well, how are you going to incentivize people to get into crypto? So the way they're approaching it is that, well, hey, we're going to create this thing where it's like, maybe with the stable dollar, or where you can deposit actual dollars into Abra, and then you can earn interest there, which is on the back end probably set up somehow in a crypto way. Maybe they'll be doing like DeFi farming in the background. But so they have this feature where it's like, well, you can get involved and you can get exposure to the stable dollar, and earn interest, which is the best way to kind of give the first taste to those people that are not familiar with cryptocurrencies. And especially right now, given the environment where the interest rates are at ultimate lows for a while, right?
Mm.
And it's like, for our generation, where previous generations experienced where they could save money and put money in the bank and earn interest. Our generation is like, well, guess what, we're not getting that interest, because interest has been low for a very long time, obviously, due to the global economic environment that we're in right now. So I think it's a great time for for them to reintroduce something where it's like, well, these type of generations that are trying to get into save some money while staying in dollar and earn interest. This offers a platform for that rather than keeping your money in the bank, where in some banks, actually, like European banks, they end up paying to store your money there, which is
Mm,
like what
yeah.
so like I think it's a very good thing for Abra, the way they're approaching this and the way they're trying to roll this out to gain that market share. I think overall it's going to be very beneficial for the crypto industry on onboarding all these users that can come in and just get exposure to the dollar and just earn interest on that.
Yeah, it's a nice happy medium between no negative yields like you're talking about in Europe and trying to chase DeFi farming and all that stuff that goes on. Mashinsky, when we interviewed him, had that great point that
Yeah.
most users in the world today, although we are seeing this huge influx of capital into DeFi, most users are not going to be exposed to DeFi whatsoever. Maybe
Right.
not until the UX UI or things start to get a little bit easier. I know MetaMask has come under fire a little bit for their UX UI. Just until we have the tools laid out for different people to kind of come in and use these different apps, Abra's building this stuff, and they're going to see success with the general audience, not the crypto audience. I'm sure some crypto people, but they're building it out for the long term play, I'm sure.
Yeah, absolutely. Yeah, and kind of just, I don't want to get too tinfoil hatty, but like the reason why like this stuff is really kind of strikes me with the with the setup for Abra and just any type of platform that rolls out interest on, especially in like stable dollars, is that if you think of in general, when I talk about this generational change, where in our generation, um you have where it's like really low interest rates, so you can't really save money. Real estate market is not too hot, and also the restrictions to get into real estate are pretty heavy, obviously, for what happened. So regulations and restrictions kind of start overreaching there, even
Mm,
though, yeah, there is cheap credit to get loans, but the restrictions to get access to the cheap credit, well, it's like I can buy that house for cash, why do I need this credit, right? So it's like all these things that are happening in the background where um well, we're faced with, all right, well, the way things are right now, um we can't really take a safer approach and save money like it's been done in the past through interest and so on.
mm,
Now we're forced to take risks and, let's say, get pushed into the stocks, or get pushed into, like, cryptocurrency is something that's obviously very risky, and a lot of the people are getting into that to chase that return there. So overall, we're getting pushed more and more into riskier assets to make returns for our retirement, down the road. But something like this, where it's like, well, you can literally just hold a dollar and earn interest, is something that's much safer than getting into like DeFi farming, for
mm-hmm.
example, and so on. So, right, I think it gives an opportunity for, um, you know, for our generation to like a kind of like a, not a way out, but another product that you can use without being forced to take risk and get into volatile assets, and hoping that that's going to work out down the road. So
Yeah, I'm interested to see. I mean, you always bring up kind of the macro take on the way the world's working with interest rates, negative interest rates that you just mentioned. I'm interested to see how that all plays out with projects like Abra, man, where you see like mass adoption from people on the ground, not just crypto users in our environment. So I sent you a link that if you could post, guys. We were trying to post links through Layer1. And I guess those come up kind of like as shadow links. They come up on my screen, but not on yours. So Manos was asking what's wrong with MetaMask. I had mentioned that earlier. They kind of came under fire this week from a couple community members talking about kind of the UX UI and how they've done an okay job. I'm certainly a user of MetaMask. I think it certainly does its job, but it could be probably a little bit more improved at this moment in time. I mean, it looks a little bit different from what it did back in 2017, but not all that much if we're being honest. So
yeah, I was we talked about the updates to the MetaMask the other day. I'm a user of MetaMask.
Hmm.
I think they're pretty good. As far as the UX and UI goes, the features that they were releasing is like you can share only specific wallets with the site and more privacy and so on. So I don't know. I think people just like to pick fights.
Yeah, crypto users, crypto Twitter specifically likes to pick little fights. I think crypto developers can be a little bit finicky as well when it comes to what they like to see. But yeah, I mean, I guess the argument is probably more from the fact of like 2017 MetaMask to now doesn't.
Yeah.
I mean, it looks a good amount improved, right? But it doesn't look like worlds difference in the amount of funding that they probably got from Consensus. So I think that was more the argument there. But certainly, I'm a user of MetaMask. Love what they do. I couldn't interact with the Ethereum ecosystem as much as I do without it.
Right.
Speaking of Ethereum, we'll move into Ethereum real quick, guys. We've got probably, I think, what are we at here? We've got an hour and 25. We'll fly through the remaining part of this interview or this Layer1Live. We got ETH, EOS, DeFi, and NFTs that we'll fly through here. But appreciate you guys sticking along with us. Shout out to everyone in the chat. Shout out to the lads.
Boom, boom. So yeah, ETH. As far as the ETH goes, Ethereum tokens are now more valuable than ETH itself, which is kind of goes back to that same analogy where it's like, well, Amazon is less valuable than the vendors that are selling it, right? You know what I'm saying? So like, it's that type of analogy here, which like the article talks about obviously the DeFi, ETH overall has benefited from many different kind of hot sectors. So DeFi was obviously one of them. Another one is stable coins. That benefited a lot. Stable coins became hot, and market cap has been blowing up in those sectors. So that's something that I think in general you kind of could see that happen. And you could foresee this happen where the overall Ethereum tokens are now more valuable than ETH itself. I think that's something that somebody should have anticipated happening as overall the tokens underneath are getting more and more valued.
I would talk about the quality of those tokens in projects as well as the quantity, right? Like there's just been more tokens. Like when you flood the industry or that ecosystem with 100 more tokens, even if they're worth 25 million each, it's just like you eventually get to that point where you probably are starting to make that flip. I mean that's another debate too, right? Does any of this DeFi like gains, does any of that go back into the big protocols? And like that's the whole fat protocol thesis, right? Where you got value that's accruing on the main net or on that initial protocol, like an Ethereum, like an EOS, like a Polkadot, or is it going to accrue on all of these other platforms? Certainly, we're seeing that that's not true on Ethereum, and definitely some of these other protocols. What do you make of it?
Yeah, I mean, so the way it returns back is through gas fees, and we know gas fees are pretty big right now. So, that's like the best way that the value can return back to ETH itself. But when you talk about like valuations in general, like come on, like when you look at all the really like I don't know actually a hard value, but that's why I talk about like let's say DeFi and stable coins that has quite a bit of weight when it comes to value, but everything else it's like I take that with the big grain of salt there.
Yeah, absolutely. I think those are good points. I think we lost you for 2 seconds there, but I think
no.
the connection kind of came back. But we get your point. Definitely hard to get valuations, especially during market cycles like this. So we'll see where everything ends up. Certainly, Ethereum is building itself out, and we'll see if gas fees actually play out, and see if any ETH killers can come around. CryptoKitties was the last time we heard ETH killers, and that's basically where we almost are at as far as transaction fees and kind of usage on the Ethereum network. So I'm gonna move this over to EOS. It pains me to move this to EOS and not really have any EOS news, but we've got Wax, who's certainly an EOS.io tech user. So obviously, guys, we had that Garbage Pail Kids. If you've been on the channel, we had NFT Live that we touched on this. We did like a giveaway on these different giveaways. Crypto Pickle, he did a giveaway of some of these digital trading cards. But if you hadn't heard, obviously Wax partnered with Tops. Tops is releasing these digital trading cards. These Garbage Pail Kids. Toxic Exotic is the type that was released this past I think last week Monday, that kind of went off this Tiger King craze that hit Netflix, and basically they raised around 200K in USD. So the Wax was not used to purchase these. They were able to raise 200K. I think it was 20,000 cards worth, so or 20,000 packs worth. I don't know if that's correct. That I think that definitely is correct. So you went in and you purchased these different packs, and they raised 200K. The users definitely had some things to say about this raise. There were things that they can do better in the future, which is maybe releasing it more democratically to the public as opposed to letting the Telegram users get in first. Certainly, a lot of people benefited from that. Mint numbers are something that is to be discussed going forward. The way that this works, guys, is if you bought packs quicker and you open them quicker, you got a lower mint number. So everybody wanted the number one of the different mints. So if you have, I think there were must have been 50 different types of cards within this Toxic Exotic series, and each one had a lower mint, and you were able to sell those lower mints for more money. I think what they'll eventually do here in the future with Wax is pre-mint these cards where you're not rushing to open them so quickly. A lot of gamification that goes around with this process, but it's good to see. Wax is doing huge things in the NFT space. I think they're super undervalued when it comes to just the space in general. I mean, they're making pseudo partnerships with all of these big companies in the space. Hopefully those companies roll out different collectibles, but Tops is benefiting 100% from these sales, man. I mean, these have sold out within hours, minutes, days, and Tops is definitely super happy with all this. So we've got some comments here that I'll get to here. Crypto saying ETH 2.0 coming out 2030. I think Crypto Pickle saying my Wax Guild will be on Layer 1 someday if you run out of guests. Nice, man. We appreciate some of that love. Seth is an NFT enthusiast. So that's pretty much it from the Wax Guild. Did you have any thoughts on what's going on with the NFTs on Wax?
Yeah, so didn't you have a pretty good sale there for your cards? Yeah, my man is flipping cards here, and also for NFT Live, I like how the lads were trying to shake you down for those very good cards. Like, hey man, you're doing the giveaway. I think they shook you down for one of this big one, right?
Yeah, they shook me down for a Prism, man. The Prisms are like those, those Pokemon cards they had like holographic, where it was like shiny. They shook me down for one of those shiny ones. But man, yeah, the giveaway was so hot that I got a giveaway. Somebody from the channel dropped me a card. That's how crazy NFT Live was this past week. So yeah, man, I mean, I flipped a good amount. Again, I benefited a little bit from not having any issues with kind of buying cards. There was that kind of ICO. I talked about this on NFT Live, but there was that ICO craze where people were upset because it sold out within an hour, and the big mega pack sold out within like 10 minutes. So everybody was furious that they couldn't get these packs. Their credit card got declined. There was some Oracle issues with the blockchain talking to the front end, and it was just like there were some problems. But that happens in a sold out sale. So we'll see. I think they do move to those pre-mints, though. I think it's a little bit more democratic. But I definitely benefited from the way they rolled it out this time. So that's pretty much it, man, from Wax. We'll talk more NFTs in depth on NFT Live on Thursdays.
Yeah, absolutely. Let me see. So we're next piece of news we get into is NFT to wrap up things, right?
Oh, so did we pass on? I guess we touched a little bit on yEarn governance in Three Arrows with the
Yep.
Aave sale.
Yep.
Okay. All right. So I'll move straight into NFTs. You had this yield farming story. I guess NFT DeFi is making its way to NFTs. That's basically the story, fellas. We've got Super Rare kind of launching a governance token here. So governance tokens are all the rage. Again, Kain pointed out that it's a way for companies that aren't taking in any revenue to actually kind of get a return on their time. We'll touch on that story here in a second, but I've got Ethereum, a gaming startup, Sorare, earning, it looks like $4 million in an investment from, let's see, Sorare got that $4 million from a ton of other companies, but it looks like specifically Partech, Fabric Ventures, and Semantic Ventures. So these guys have been kind of putting out NFT trading cards based on football clubs. So they're kind of specifically targeting digital collectibles when it comes to soccer and football clubs globally. Andre Schürrle is on here as one of the investors. He was a famous player, I think a famous German player, but he played for Chelsea, which is how I know him. But it's good to see some more funding going into trading collectibles. We'll see how kind of packed that space gets here over the coming months and years. I've got another piece of news. The Sandbox came out recently and revealed what their I'm going to put up this Sandbox game here. So when the Sandbox first launched, you had this map and you were able to see the various estates. Obviously, people purchased a ton of these estates. But as you can see on this map that I'm pulling up, the blue boxes are all estates still owned by the Sandbox team. And people were kind of wondering, hey, like what's going on here? Like, are you saving these for later sales? But it looks like at least initially what's going to happen with these boxes that I have pulled up on the screen is they're going to be transportation sectors. So they're almost going to be subways within the Sandbox. This is coming from Play to Earn. I use them for all my NFT news. Basically what's happening here is the Sandbox has revealed the first details on how to travel through their virtual world. There will be portals that connect lands with each other. Individual lands are connected by simple portals, so if you're in an adjacent land, you can simply hop on over to the next portal. But there's these special terminals that will be placed all across the map via these Sandbox estates, and people will kind of use those to ferry themselves, across the world. Now, I want to get your take on this because they could have easily come out and said you can just port wherever you want. You can just like abracadabra, I'm in this spot. Instead, they chose to actually make this a manual process of going down into a subway, porting into the subway, and then ending up wherever you want to go. What do you make of the way that they chose to go about this?
I like that setup. I think it offers a lot of different opportunities where you have certain like locations that are very hot, that attract traffic. So that means that, let's say if I have to go to that specific spot, like a teleporter, like a town portal, with one single spot, that offers like the ability for people to place maybe advertisements or stay there to sell stuff, right? That's usually how it's done in games, in this gatekeeper you have around people selling stuff, like, because everybody knows you need to use that subway or whatever the transportation is to get to the next location. So yeah, it's cool. I like it. It's better than just teleporting anywhere you want, because otherwise, in that case, you wouldn't have that centralized location, right?
Yeah, I think in this specific article, this was a Play to Earn article, but Sandbox obviously released their own publication post, and they basically said that exact same thing that you kind of laid out there, was that they wanted to create this central environment where people couldn't just go anywhere, where if you kind of wanted to go see this, you actually had to stay in that area for a little while, and that obviously increases the value, the foot traffic, all of these different things, as opposed to just blinking all across the map and kind of lowering the value of different areas.
Centralization confirmed.
Yeah, exactly. So that's the Sandbox. It obviously is gearing up for launch here at the end of I believe this year. So Q4 2020, I think you should see a public version kind of released and we'll see how successful they are in doing so.
Yeah, that's awesome. So I guess that's about it. The last one that we have is yield farming expands from finance to digital collectibles. So, this article though is kind of tricky, because it talks about the DeFi and then it talks about, hey, this platform is going to release a governance token. So it's trying to put in the kind of in the same, boat as like, all right, these guys are going to release a governance token, which should kind of be like the similar effect that the DeFi had with releasing their governance tokens. But I couldn't find more information in terms of like, how like this thing is actually going to be related to the DeFi like structure, how the DeFi space is, or is this going to be a governance token? Looks like, seems like it's just going to be a governance token to it. And, some of these articles, what they try to do is to try to capture the eyes, right? So they'll have like a headline that fits the narrative that we have right now in the market, and then kind of starts talking about like something that not necessarily is related to the headline itself, right? Or just trying to capture exposure. So I'm not seeing anything clear that would say that the NFTs are starting to have DeFi properties, besides the fact that they're just going to be releasing a governance token. And this is related to the platform, but it's just like OpenSea. The other one that's called? Let me see if I can see this name. Rarible.
Yeah.
Rarible, right? What's your opinion on that site overall? I mean, you've been looking at NFT marketplaces. What is your kind of go-to?
Yeah, so Rarible has specifically tried to target the art industry, right? So there's a ton. If I pull up Rarible here, man, I might be able to do that. Is it Rarible.com or Rarible.io? Basically, what you're doing here is like in an OpenSea type of way, you're buying and trading digital collectibles. So basically, what this token, and they say it in the article here, is going to be kind of launched and released. It's going to incentivize liquidity like you would on an OpenSea. So if you buy and trade, buy, sell, trade on this platform, you get the Rari token as a way to incentivize, trading. So not only are you trading and buying and getting all of the profits or losses or what have you from trading these assets, you get the Rari token as well. They go on to say that it looks like they're looking at the creation of an NFT index. There's a ton of different things that they're looking to start doing, but I guess when they're talking about initial token distributions here, it says before people can start voting their Rari tokens, they need to hold them. So here are distribution details. So if you want to take a look, obviously the link is in the description if you want to give the Rari token in a once over. You can see that, but it's interesting to see incentivizing liquidity come to NFTs, and I think that's basically the point of the article when it says it's kind of merging with DeFi, and that's basically taking the approach of the way DeFi has incentivized liquidity on their protocols. NFT or Rarible's trying to do that with NFTs within their own marketplace. So
yeah, it's interesting to see how it's like, well, when you're trading, you instead of paying the fee, you're actually earning, right? Which is then you can say if it's gonna, I don't know how it's gonna perform in NFT markets, because you could say that, hey, if you just trade this between the two parties back and forth, like
yeah. I think that actually came out. If you guys go to Non-Fungible's Twitter profile, I think they actually came out and saw that there was some washing going on with Rari, and people were calling it. I guess whoever was doing it that they called out, they said that they were just trying to mine Rari. So they were trading thousands of dollars back and forth, and they were able to accumulate Rari. So a lot of gamification going on with these tokens. We'll see. Obviously, it's not built out. People are kind of just like chasing this narrative of incentivizing, activity on their platform. We'll see. We'll see what goes on with Rarible.
Yeah, I'm on their website right now. Went to explore to just check out, see what kind of NFTs they have. The first one on here on the Explorer is called Liquid Trash. It's currently at $5.95. It's kind of like an animation of liquid trash. It's like an art form. Interesting stuff. Yeah, we'll see how that's gonna work for NFT space.
Yeah, governance tokens sound good in theory. Obviously, like
Right.
making the user or making the activity. I guess the user would make sense. Making that community member or making that user available to kind of make changes to the platform. Essentially,
Yep.
that sounds great in theory. We'll see if they ever get to that moment. Everyone's trying to create a governance token and dip out. At least some are. But yeah, that's it for the news today, guys. We appreciate you kind of staying till the end there. I think Seth's saying gonna need the Oasis for all in-game assets. Certainly, that's a hope of most NFT enthusiasts. The Oasis is definitely out there somewhere, and hopefully within the next couple of years we see it. But that's it for today, guys. We appreciate you sticking to the end. We've got that LADS token launch that we talked about. That was fun. We'll launch more information on that LADS token over the next coming week. I think we're gonna have one article out tomorrow telling us kind of what the LADS token is and why we chose Roll. And then on Thursday we'll launch kind of the token economics or token kind of model that we're gonna use for how we're gonna use the LADS token to help grow the Layer 1 community.
Yeah, absolutely. Karen is saying GG in chat to everyone. So tomorrow, obviously 5 p.m. Eastern, we're doing the new desk. As far as the interviews line up for the week, do we have NEM this week?
We got NEM, and then we have library.tv. They're doing kind of a decentralized content distribution platform play. So that'll be a good two groups to talk to. Again, appreciate you guys staying till the end. Please give a thumbs up. Like I see a couple in the chat that are talking about it. Give a thumbs up if you're about to head out. We appreciated having you guys through the whole time. But that should be the lineup for the week. We'll again give more information on the LADS token. This is just the beginning for Layer 1, so we appreciate everybody that has given your support up to this point, man. It's been awesome.
Yeah, man. Cool. All right.